Hello, traders. FX Pip Collector here. Today is Thursday, February 20th, and this is my morning video where we take a quick look at the dollar pairs, including gold, and we also take a look at the JPY pairs, at least a couple of them. If you haven't done so already, definitely check out my free Discord trading community, link down here in the corner of the video at the end, and in the description of the video. If you want to check out my website, it's fxpipcollector.com. Get you access to all the benefits listed below and more. So, anyways, I always like to start off by checking out the news calendar. It's really important to be aware of what the news is for the day. Not really a whole lot of US dollar news this week. It's kind of slow this week for the dollar pairs overall. We have unemployment claims today, which definitely can move the market, especially if it comes out dramatically different than they forecasted. But it's definitely not like a big giant market mover. A lot of the really good news this week has been in the Asian session. The next big thing for the Asian session is the Aussie Bollock speaking. The governor of Australia, Bollock, is speaking this evening. Been a lot of good news this week for the Aussie and the Kiwi pairs. So definitely, if you are available during the Asian session, it's been a really good week for Asian session trading. So, anyways, let's take a quick look at the US dollar index. It's such an extremely important analysis for me. I still am looking at this as possibly being the end of a wave B, and this is likely, if that's true, going to go all the way down to at least the 100% Fibonacci extension to make what I think is an a B, and a C correction to the monthly time frame uptrend. So if this makes a huge downtrend like this, then you would expect a huge uptrend on all these pairs, a big downtrend on these pairs, and gold kind of does whatever gold wants to do. So you can't really use the dollar for gold so much. But going down to the daily time frame, I just want to show this because I have my Fibonacci retracement on this last wave up. This definitely still could be an ABC correction. This is definitely a five-wave downtrend. This is a correction. If this makes a five-wave downtrend to the 78%, then turns back up and breaks structure, that's going to confirm ABC correction, and that's going to tell me the dollar is going to go back up, probably make a new high, which would cause the same exact move on the dollar pairs. But on the same account, if it goes down and bounces from the fib level, doesn't break structure, and keeps on going down, then that's going to confirm to me that this really is the end of a wave B, and that we really are in a big giant downtrend on the weekly monthly time frames for a big wave C. And like I said, if we're in a big giant downtrend, then we should be in a big giant uptrend on all these pairs and a downtrend on these pairs, which is really important information for sure. So, anyways, moving on to the euro dollar. The euro dollar has definitely been in a pullback, as you can see. Um, Now, if this is a wave one and this is a wave two, then this needs to continue to make higher highs, higher lows in a wave three. A wave three needs to be a big, strong trend. Hopefully, what we're looking at is like a subdivision one, subdivision two, like a one of three, two of three that just keeps on going up. We got our Fibonacci retracement on here. We're definitely looking for pullback entries to go long for the continuation of hopefully a big old wave three. But we're also paying very close attention to that dollar index because that should tell us whether we're correct about this being a wave three or not. Going down to the 1 hour time frame, like I said, I do have my Fibonacci retracement on this whole move up. I'm looking for a fib bounce. I'm looking for breaks of structure. Now, this move down is actually just kind of like lower lows, lower highs. But if for me, if it does break and hold above this structure, it definitely would turn me back into a buyer. And if it breaks and holds above that structure, I would hope that it would just continue the uptrend from there. Nice 50% Fibonacci bounce. But there is a chance that if it breaks structure, it just turns into like a wave B, and then it goes down, makes a wave C, and makes more of a proper A, B, C correction. But the thing is if this is really a wave three on the weekly time frame, then it's probably not going to do all that. It's probably just going to break structure and just keep on trending up. So if you are a really short time frame trader and it doesn't break structure, then you could continue to look for shorts. If you do see a nice break of structure that holds above structure, then I would definitely switch over and start looking for longs again. Moving on to the pound dollar. Pound dollar really didn't even make much of a pullback at all. I mean, it did bounce from the 100% Fibonacci extension, but like I was saying about the euro dollar, if this is really a 1, 2, 3, then this needs to continue up. I would target at least a 161% Fibonacci extension for this wave 3 if it really is a wave 3. And the US dollar analysis should confirm one way or the other, probably within the next day or so, whether it really is a wave 3 or not. Going down to the 1 hour time frame, I'm back long on the pound dollar. I kind of feel like what likely is what happened here is this is like a little bit of a flat pattern. It kind of impulsed down, three waves up, impulsed down, one, two, three, four, five. Nice break of structure. Seems to me like we're back into the uptrend, and if this really is a wave three on the higher time frames, then it's likely that it will keep on going up. Unless it goes down and breaks structure to the downside, I would definitely recommend looking for longs. Like I said, if this is a wave three, this thing has a lot of upside potential, potentially all the way up to the 161.8 and beyond. We're only at the 100% right now, so we have a lot of upside potential if this really is a wave three, which, if we pay attention to the US dollar index, that should tell us one way or the other whether we're looking at a wave three or whether we're looking at a wave C. So moving on to the Aussie dollar. Aussie dollar overall has been a very strong pair. We got a nice break of structure, nice five waves down. This is really looking very, very nice. We are pushing beyond the 61.8, which tells me that it's probably just going to keep on going up to the 78, probably just keep on going. Really, if this is a wave one, this is a wave two, and now we're in a wave three, I would expect it to go up to about the 161.8, probably make a wave four, make a wave five like that. And this potentially is all just a wave one of a brand new uptrend, like a one, two, three, four, five of one on the weekly, monthly time frame. So overall, I would definitely be extremely bullish on pretty much all these dollar pairs. I mean, if you have been doing nothing but looking for longs, even catching some of these little impulsive moves up have been pretty dang profitable, especially if you're a short time trade trader. Now, if it turns down and starts breaking structure to the downside, that would definitely switch it up. But if not, any move I see to the downside, I would look at nothing beyond a correction to the uptrend. That's why, for me personally, I would not recommend looking for shorts. I would only recommend looking for longs at the end of pullbacks. I wouldn't be trying to go long right now. I would only be looking for longs on pullbacks. I have no idea whether it's going to pull back now or whether it's just going to keep on drifting up. But I do know that if and when it does make a pullback, I would definitely be ready to get in again for the continuation of the uptrend. Moving on to the Kiwi dollar, exactly the same analysis as the Aussie dollar. It's just the Kiwi's a little bit weaker, but pretty much exactly the same thing. I would expect to see like a one, two, three, four, five of wave one, just like the Aussie dollar. I do trade the Kiwi dollar, but I don't put a lot of time into analyzing it because it's exactly the same as the Aussie dollar, just usually a little weaker or a little stronger. Moving on to the US dollar CAD, the US dollar CAD broke structure to the downside, and I think that confirms this big giant downtrend to the downside. So we potentially have a lot of downside potential on all these dollar pairs. So we are in a pullback. I got my Fibonacci retracement on the last little wave down. Definitely looking for Fibonacci bounces on shorter time frames to go short for the continuation of this big downtrend. Going down to the 1 hour time frame, let me get rid of this first fib. So on the 1 hour time frame, I got my Fibonacci retracement on the whole push down. I'm looking for three-way pullbacks. I'm looking for Fibonacci bounces. It kind of looks like it's already trying to do so. I see three waves up. I see a Fibonacci bounce. I see a break of structure. It looks like it's already going down. So that tells me that I would definitely want to already be short, or I would want to be waiting patiently for pullbacks to go short again for the continuation of the downtrend. I definitely would recommend looking for shorts, and I would definitely recommend looking for shorts at the end of pullbacks. Don't try to chase it. Don't try to go short now. Wait patiently for a pullback. It may not happen today, it may happen tomorrow, but a pullback will likely happen at some point. And when it does happen, you definitely want to be ready to go short again. Moving on to the US dollar Swiss. Now, we definitely have what looks like a complete five waves on the dollar Swiss. One, two, three, four, five. We don't really have a clear break of structure yet, but I mean, it definitely looks like it's going down. If it's going to follow the other dollar pairs, then it potentially is going to make a big old downtrend. So we should definitely be looking for shorts in a downtrend on shorter time frames. Going down to the 1 hour time frame, I got my Fibonacci retracement on here. This one I can't really see a nice clear three-way pattern. We do have a little bit of a fib bounce. We do have a little bit of a break of structure. So if the other dollar pairs are going, then this one's probably going to keep going also. So if you do see a pullback, I would also be trying to go short on this. Unless it goes up and breaks structure to the upside, I would definitely be recommending looking for shorts in a downtrend. If we are in these big wave threes on the dollar and all the dollar pairs, you have to remember that these corrections are probably not going to be deep corrections. They're just going to be shallow corrections, and they're just going to keep on making lower lows, lower highs on the much higher time frames. So moving on to gold. Anybody that's been following along with my gold analysis has probably been doing really well. Anybody that's been trying to go short on gold for the last month or two has probably been doing really, really bad. Gold is in a uptrend on the monthly, a big uptrend, wave 3 uptrend, wave 3 uptrend on the weekly, wave 3 uptrend on the daily. There is no reason whatsoever you should even think about going short on any time frame on gold. My new target for gold is $3,000 an ounce at the 261.8 for maybe ending a wave 3. But I definitely won't be going short at that level because it potentially could just make a bounce and just keep on going. I definitely would not recommend going short. Ever since this thing made a higher low way down here, I've been saying for weeks to look for longs at the end of pullbacks. And if you've been listening, then you've probably been making some really good profits in these markets. Going down to the 1 hour time frame, I think what happened here is we had a running flat. We had one, two, three waves down, one, two, three waves up, and then 5 waves down. Higher high wave B, higher high wave C. That is what I would consider a running flat. 335 pattern. Now we're just trending right back up. Yesterday I said that this looks like a 1, this looks like a 2, it looks like a 3, and this looked like an ABC of 4, and I said that it looks like it's going to go back up. And that's exactly what it did. So like I said, if you've been following along with my gold videos, you've probably been doing really well with your trading. I would definitely recommend looking for long still. I definitely wouldn't recommend going long now. I don't know if it's going to pull back now or not. It potentially could just keep on drifting up, but I do know that if it does pull back, I would recommend looking for longs at the end of any single three-way pullback that you see on these sort of time frames. Like I said, when the monthly, weekly, daily, and 4 hour and every single time frame in between is in an uptrend, you have to be completely crazy or dumb to be looking for shorts on these sort of time frames, in my opinions. So moving on to the US dollar yen, I also think that the yen pairs, I think every single yen pair is in a big wave C downtrend. I think that overall these trends are going to keep on going down. I think the dollar yen is probably going to break probably about the 136, 137 area, over the course of the next few weeks and months. So overall, definitely very bearish on the US dollar yen. Look at this beautiful three-way pullback, by the way. One, two, three waves up. Beautiful three-way pullback. That's exactly what I recommend looking for every single day in my videos is these three-way pullbacks. Now, I wouldn't really want to go short now. I would only want to go short on a three-way pullback. So if it makes another three-way pullback, I would recommend going short. I would definitely not really recommend going long on any of the yen pairs unless you're just trying to scalp a few pips. I would definitely recommend looking for shorts, and I would definitely only recommend going short on three-way pullbacks. Anytime you see a move to the upside, you throw your Fibonacci retracement on that move, and you look for more entries to go short for the continuation of the downtrend. Moving on to the euro yen, my analysis is exactly the same on every single yen pair. I think that the euro yen is potentially going to go down to the 100% Fibonacci extension, probably someplace around the 144, 145 area, someplace in this area to finish off a wave C of wave 4. Overall, I think this daily time frame will continue this lower low, lower high series, going down to the 1 hour time frame. Now, if you've been following along, you've probably been, trading with the trend and making all kinds of money. If you've been trying to counter trend trade, you've probably been losing money. Now, I don't think I would want to go short now. I would want to see a more proper pullback. I would probably, if it does start making a nice proper pullback, I would throw my Fibonacci retracement on there. I'd look for three ways back. I would look for a Fibonacci bounce, and I would look for more shorts. I have no idea if it's going to make a three-way pullback right now. It potentially could just keep on going down at any point because the trend is down. I'm just saying that if and when it does make a three-way pullback, I will definitely be ready to go short again for the continuation of the downtrend. And the pound yen, exactly the same analysis as all the other ones. I think that the pound yen is going to go down to about the 100% Fibonacci extension, right around the 171.5 area to maybe 170 area, right down in this area. So lots and lots of downside potential for the yen pairs. I think overall the daily will continue to make lower lows, lower highs. As long as it doesn't break structure to the upside, I would definitely not recommend looking for any longs unless you're just trying to scalp a few pips to the upside. Even then, I don't think it's really a great idea. Now we are a little bit of a push up right now, but I mean that doesn't really tell me anything. I mean it potentially could just go down and down and down. Hopefully, what happens is we get another decent pullback, like another three-way pullback, because I would be looking at any counter trend move I see as nothing more than an opportunity to go short again. I'd be looking for one, two, three waves up to go short. One, two, three waves up to go short. I would not really recommend looking for longs unless you're scalping. I would recommend looking for shorts at the end of every single three-way pullback I see. If it does start a decent pullback, then throw your Fibonacci retracement on there, look for three waves back, look for a Fibonacci bounce, and look for more shorting opportunities for the continuation of the downtrend. Now, definitely don't forget to join my free Discord channel. It's a free Discord trading community. And as always, thank you for watching and happy trading.